shares of microfinance lending institutions, or MFIs, have been steadily minting money for investors over the past few months. Suryodaya Small Finance Bank, Satin Credit Care, Credit Access Grameen, Fusion Microfinance, and Spandana Spurthi have jumped up to 45% at the bourses over the past 6 months. By comparison, the benchmark S&P BSE Sensex has added 2%, while the S&P BSE BankX index has slipped 0.2%. So, what led to this sharp outperformance? Analysts say the massive credit upcycle post the COVID-19 induced slowdown, along with the Reserve Bank of India's new guidelines on microfinance, boosted sentiment.
A healthier balance sheet and a strong demand for credit has been responsible for this optimism. However, the game changer has been the new regulatory changes which came into effect in April 1. Number 1, there has been a removal of margin cap, and number 2, the household income to get qualified for microfinance loan has now been increased to 3 lakh. What this means basically is that the removal of margin cap would help in aiding the bottom line of these companies, and increasing the household income to 3 lakh would help in aiding the top line. These factors have resulted in a sort of a re-rating for these microfinance players.
According to data from industry body MFIN India, microfinance loans grew 22% year-on-year in FY23 to 3.48 trillion rupees. This was higher than a compounded annual growth rate of 11% seen during FY2022. Loan disbursals too improved by 23% to nearly 3 trillion rupees last fiscal. This helped MFIs expand their market share to 38.2%, up 331 basis points during the first 9 months of FY23. The market share of banks involved in microfinancing, meanwhile, fell by 430 basis points to 36% during the period. Going ahead, analysts expect strong loan growth in FY24 and FY25, driven by increase in ticket sizes and regulatory tailwinds.
So we feel that FY23 was one good year. There was some growth in 22, but then 23 was one good year, where we grew about probably 20-21% in the NBFC space. And this momentum is likely to continue, and we see that 24 the growth would be something around, internal estimates say that the growth will be something around 25%. And the industry has a sort of a good regulatory environment. The interest rate scenario has been improved. So the things look pretty good on.
Against this backdrop, have investors missed the bus given the sharp up move, or does this rally have more legs?
This is an indication that we are probably in the initial stages of a credit upcycle in this microfinance space. However, we can't simply rely on a market upcycle. In case of microfinance players, there is also an element of regional risk, and therefore you would want to pick those microfinance players which have a very well spread out geographical presence in the country. This environment of healthy credit demand and healthy asset quality is expected to sustain in coming quarters as well, and therefore the quality players in this space would continue to be benefited.
Analysts at Anand Rathi Shares and stockbrokers, who recently initiated coverage on the sector, have assigned hold rating to Credit Access Grameen with a target price of 1,421 rupees. They also have buy ratings on Fusion Microfinance and Spandana Spurthi. JM Financial, meanwhile, prefers Credit Access Grameen and Ujjivan Small Finance Bank. Analysts expect re-rating in the offing for the sector amid strong earnings growth and valuations comfort. On June 21st, markets will await US Fed Chair Jerome Powell's semi-annual testimony to the Congress.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
She's working her way to the corner office. Business Standard.